Welcome back to the MTP Show podcast. I'm your host, Derek Vickers. On the MTP Show, we talk about the rather interesting, crazy, mysterious world of mobile home parks, trailer parks, and operations and crazy stuff that happens. And we really hone in on anything and everything on this particular asset class. Before we get started, I want to make sure you guys check out the link that's going to be in the show notes or on YouTube if you're watching on YouTube about our webinar that we did, where I basically did an hour and 15 minutes of the basics of mobile home park investing all the way up to how to get your first deal, underwriting deals and closing deals, and then some operations and due diligence on deals. So it's a lot packed in and it's free. So you can check that out. The link will be in the show notes on whatever platform that you are watching on. And also, if you're new in this business and you want to partner on a deal. I'm always open to partnering with people on deals. I know how it is in the beginning. It's a little daunting. My guest, we can probably talk about that as well today. Our guest we have here with us, but it is. And so, please reach out. Would love to help in any way I can. So today on the show, I have a freaking awesome guest. I have Mr. Corey Harrelson here. He's the founder of Freedom Investing Group. He's been buying mobile home parks since 2016. He's purchased over $18 million in mobile home parks, and he's owned parks in Idaho, Michigan, Illinois, Minnesota, New Orleans, and Ohio. I don't know how you manage all that, but we'll get into that and how that works. But Corey, man, dude, welcome to the show.
Hey, yeah, excited to be here, Derek.
Yeah, man,
Yeah,
awesome.
pumped. Thanks for having me. Yeah, it's well, let's get into some parks.
Let's do it, man. Let's do it, man. And so, a lot of people I talk to in this business, we don't exactly, you go to the high school or college job fair, they don't have a trailer park investor there. And so most of the people I have on this show are like from other things. And so you started in something else. So tell us about that and then talk about, what was kind of the thing that happened that wanted to make you transition into real estate.
Yeah, absolutely. So I was a structural engineer. I actually did that for 18 years. I just finally left that full time last July. But yeah, back in 2016, I was working full time as a structural engineer. It was a great company, great people, but I was getting really burnt out. I was pulling 60 to 80-hour weeks. We had just had our first kid. He was right around 2, and it was just kind of never ending. Like I would leave in the morning before he woke up, come home, and he was already asleep. And there was literally a week where I didn't see him awake. It was only asleep. And so it was kind of killing me. And then one day it was Sunday, I think, and it was working on some deadline. So it was always a deadline. And I was like, screw this, I'm going home. I'm going to go at least at home to give my kid a bath and hang out with him a little bit before I put him to bed. And when I went to take him away from my wife to like go give him his bath and stuff, he looked at me. It's like he didn't even recognize me. He looked at me like I was a stranger. It was like total stranger danger, give me back to mom thing. And it kind of messed me up a little bit. And so
Sure.
I knew I wanted to do something else. That was when it was kind of my moment where I was like, I can't just keep living like this. And so then at some point somebody gave me that same book that I think just about every real estate investor I know has read, the little purple book, Rich Dad Poor Dad. And I read that and it was like, oh my gosh, assets that pay you, there's a way out. Like you can use math to get your way out. And I don't know why I had to wait till I was 35 years old and read that in a book to figure that out, but it's not actually that complicated. But so anyway, so my wife and I, we decided we're going to invest in real estate. So we went looking for duplex, threeplex, fourplex. That's what we decided we were going to do.
Mm-hmm.
So I'm an engineer, I'm left brain. So I built a spreadsheet. I figured out how to make a pro forma. So I built my pro forma spreadsheet and I'm analyzing a bunch of deals. And I was getting, even back then, pretty discouraged with the price to rent ratios and the cash flows. It seemed like a lot of them were just barely going to cover the mortgage. And I know we could have hustled and did the whole drive for dollars things. And I know we could have found a deal, but it was a little bit discouraging out of the gate. And then I stumbled across a mobile home park for sale on Craigslist. Craigslist. It was a little 9-lot thing. And I'm in Boise, Idaho. So it was in Garden City, right close to where I live. And I plugged that into my spreadsheet. It was like, ooh, that looks a lot better. And so But I didn't know what I didn't know, right? So I did a bunch of research, and then I figured out like, oh, mobile home park investing is a thing. It's crazy, but it's not like people do it. And so, but I still didn't, I only knew one person at the time who invested in real estate. So my friend, Matt, I took him out for a beer and I was like, Matt, I'm thinking of doing something crazy and I need you to talk me out of it. And I need you to tell me why. I'm thinking of buying a trailer park. And he goes, no, man, I know people who own trailer parks. They're cash cows. And so he kind of encouraged me and helped me. We sent a bunch of letters out and found our first deal that way. So yeah, that was how I ended up coming down the rabbit hole.
Yeah, that's awesome, man. And Craigslist, man, I've never, it's the first time I've heard of somebody finding a deal on Craigslist. I mean, we've heard all sorts of things, but Craigslist, that's a new one. That's a new one for me.
Yeah, yeah. I don't know why it was listed on Craigslist. It was yeah, just this little. We didn't end up buying that one. We bought a different one, but still, that was what triggered the search.
Yeah, yeah, that's awesome, man. And you talked about Rich Dad Poor Dad, and a lot of people read that book. And you said something interesting there. You're like, oh, I had no idea I could math my way to financial freedom. The problem is that we're not taught that because I was like
Totally.
in the same boat. Like I thought that, and I've said this on the show before, I literally thought that the guy who was worth 50 million bucks got a paycheck for $50 million every year. Like I had no freaking
Totally.
clue, right? Until you start reading and you start learning. And that's why, the importance of actually having the like, hey, I don't know everything. Like, let's take the ego out of it and actually going and searching for knowledge. Like, it's huge. It's huge, and it seems like it helps you as well.
Yeah, and just knowing, I mean, even just knowing that there is that, that thing is out there and it exists, so that you would know to even go find the knowledge about it. I think that's something that's I think missing from education and everything, right? I mean, it's kind of just geared towards getting you into your job, which is good. You got
Yep,
to learn math and to read and stuff, but I feel like the financial piece is missing. So,
for sure, for sure. So you bought the 9 lot deal.
we didn't buy that one. We ended up sending a
Okay,
bunch of my buddy convinced me, okay, let's go get a list from the title company. So we sent a bunch of letters out, and it was 2016 that the secret wasn't out yet. So we got a whole bunch of responses back from the letters and kind of had a whole bunch of deals on the table. And I ended up buying a 12 lot deal in 2016 was my first park. About a
got
10
it.
minute bike ride from my house.
Oh, that's good. And I always tell people that you need to buy close to you on your first one because it just, to learn it, you're going to want to be there and kind of figure stuff out. I mean, it's huge. My first deal was literally 15 minutes from the office that I had, and it was huge for me to be able to just kind of go there every day and just kind of, scratch and claw my way through all the stuff that I didn't know. So that's super, super important. So what did you learn on that first deal?
I learned a lot on that first deal. I learned about good tenants and not so good tenants.
You learned that
And
pretty quick.
yeah, it had 11. So it was 12 lot park. We had 11 really good tenants, and one that when I had toured the park in due diligence, they were clearly high as a kite, and we knew we're not gonna and their home was like, some of the homes in there were in good shape, but it was just their home was a wreck. And so they kind of did us a favor out of the gate and stopped paying almost immediately. So we removed them, and then we end up, their home was so bad. I think we saved their life. The bedroom, the ceiling, we had a big snow year that year, collapsed over the bedroom one night.
Oh, wow.
Yeah, so it was a good thing they weren't there. So anyway, yeah, we got that home out, brought in another home, moved in a sweet little old lady who had just recently gotten divorced, um and yeah, so that was there was yeah, when we moved them out, we forgave all the back rent in exchange for them just leaving, right?
Yeah.
So we didn't have to do a whole eviction thing. But we said, you got to get everything out of your house, and they literally just put it in, like, it was like a mountain of junk in the front yard. And
Oh,
the
lovely.
neighbors said they saw U-Haul trucks coming in from other people. He had all his buddies bring all their junk too. So I think we were 3 or 4 of the really big, whatever the really big dumpsters are.
Yeah.
It was a
Oh
big
my
project
God.
getting all just the junk out of there. Yeah.
It's
But
like,
then I
thanks,
don't know, we
guys.
got them out, and we had the rest of the tenants, and there were great people. They just, have either, some of them are retired on Social Security and others had jobs, and yeah, it was good.
Yeah. Yeah. And like when you get a park like that, it's easy to tell who the rotten egg is, and all the other residents know it. And it's crazy, but one person like that can literally ruin the entire park. Like it can literally ruin the entire park for various reasons. And so it's important to to do what you have to do and handle those situations because it's only fair to the tenants that pay on time, that clean up their yard, that do things correctly, don't do crazy stuff. Like it's only fair to them if they're keeping up their end of the bargain, you got to keep up your end of the bargain too.
Right. Yep. No, absolutely. Yeah, you got to enforce the rules.
Yeah, for sure, for sure. So you bought that park in 2016, then take me through. So then did you buy another park in 2016 or how did the sequence go from there?
We bought two other tiny parks in 2017. We bought another one, I think, in 2018. These were small, 6 lot, 7 lot kind of things.
Yep.
And then we sold a couple. We cash out refied the first park and sold a couple, and we scaled up and bought a 51 pad park in Michigan in 2020. And then I was like, okay, I'm done. That's all my money for a while. I'm just gonna use the cash flow to build up a savings again to get the next one. And that was when I had some friends and family come and say like, hey, this is really cool what you're doing. Take our money and do this too. So then we started. So then around 2021, early 2021, I partnered with my brother-in-law and we started trying to figure out the whole syndication thing. So we did some 506Bs. I just did our first 506C. So we've been then doing kind of syndicating parks since then. So.
Okay. Okay. Yeah, I mean, look, a friend of mine told me, and before I had started, he's like, everybody runs out of money in commercial real estate at some point. Like, at some point, it happens. It happens. And if you read, like, I've read Sam Zell's book a couple of times, and he talks about how he
It's
had like
good.
$1 billion in real estate, and they didn't have any cash. He's like, I didn't have any money. We were asset rich, but cash poor, and
Yeah.
it ends up happening to everybody, especially if you're scaling. You can only do so much with your own money. I mean, there's no question. And so you got into the syndication world, which is a different world. And so you started with friends and family, and then did you expand to other investors after that?
Correct. Yeah, we've been, you have referrals and you kind of build up that network. And then so we've done 506B, so friends and family syndications. And then the last one we just completed the raise. We're a couple of weeks from closing on one where we did our first 506C, so I could actually talk about it.
Yeah.
And yeah, so that's exciting. I'm pumped to get that one to the finish line.
Awesome. It always feels good to get one to the
Well,
finish
not the
line.
finish line. I guess it's really the start line, but
Well,
but the
that's
finish
true.
of the DD and the raise and stuff. So
That's true. It does feel good, and then you're like, okay, the real work starts now.
that's
We got to
right.
execute on the business plan.
That's right. That's right.
So when you bought those parks, they were in different states, like they were all in different states, or is that how your
Yeah,
operation is now? You're in multiple states.
we're in multiple states, and I kind of realized like the first park we had, there was definitely some time, especially when we were replacing the home and stuff. I went there, but at some point it was, I kind of realized I would go there, but it was just because I wanted to. Like if
Yeah.
the sewer line clogged, I wasn't going to get out there with the rotor thing, right? I'm going to call Roto-Rooter. And you have a manager, and so it's at some point I kind of realized like I don't really need to be here. So it kind of expanded our search a bit. So we've been in a bunch of different states, and I will say we sort of chased deals where we could find, we had location criteria, but we're in a lot of different states with not that many parks. So
Yeah.
we are trying to we're trying to say like, now I think we're saying like if we're going to go to a new place, we need a bigger deal to make it worth our while. Otherwise we want
Right.
to be niched down to like, we're really kind of looking a lot right now around that we're calling the Bourbon Triangle. So Lexington, Cincinnati,
Mm.
Louisville area. But yeah, it's kind of nice. Now we've kind of, I guess the good thing about it is we've gotten to see a bunch of different locations and what we do and don't like about different places. So.
Yeah. Yeah. And that's so true. Like, so when if you're buying value add stuff, like you do like sort of have to kind of, the projects and contractors, if you don't have a team yet, you'd have to manage that stuff. But now, like when it's stabilized, you go to the park and you're like, why am I here? I'm here to drive and see the park. Like, what am I here for?
Right, exactly. Yeah, because you have an on-site manager, and so if anything goes on, they can tell you. You could get put, and it's still worth going and visiting. But when we were were out for our Louisville one, we drove up to our Cincinnati park and, brought some donuts to the manager and stuff. And it was good to see. It was like, yep, still looks good.
Yeah.
um, yeah. So, but you're right. When you've got the contractors and everything, that's one of the things I'm excited about. Our Lexington one is it's only 90 minutes south of the one we have outside of Cincinnati. And so it's a lot of we're already buying homes from around Lexington and moving them up to Cincinnati anyway. So we've got a lot of the contacts there already. So that's finding contractors is a big lift in a new area.
Yeah. Yeah. Once you have your, we've typically bought kind of in clusters and in areas, and it's a little bit easier once you find your contractors, because it is hard to find the ones that you can trust, because there's a lot of them out there. Yes, you could find one tomorrow, but is it somebody that's going to get the work done, going to get the work done properly, going to get it on time? Are they going to run off with your money? Because we've had all of the above happen.
Yes. Yeah. As have we. Yeah. They've got good reviews and everything else. And then they get half the job done and then just stop answering the phone. And yeah, we've definitely, we've dealt with that for sure.
Yeah. Yeah. What's your deal
Yes.
criteria? Are you guys buying stuff like, are you any value add, or is it just, are you buying tenant owned home stuff, or what do you guys?
Yeah, so we're specifically looking for value add. I feel like I know the mobile home park space is kind of like everybody thinks of it as a cash flow investment, and the cash flow can be good, but I feel like the value add is where the real big opportunity is, because just so many of them that are so undermanaged.
Yeah.
There's parks in places where there's an affordable housing crisis and the housing is expensive and no one can find it, and then there's empty pads sitting there because no one's brought homes in, taking the capital and the time to bring them in and fill the pads or patch the potholes or do the trees. So like I think that more so, like, people think about apartments that way, but a lot of times a lot of the apartments are already run by syndicators, and it's like, okay, you can put some fancier doors on it and maybe paint and carpet and stuff, but with mobile home parks the value adds massive, just because there's
Yeah.
so many that are just so undermanaged. So that's specifically, and we've done some pretty big, like I came from a background where I was managing large projects, so projects don't scare me as much, as long as we've got the team, we can get the team and everything in place to do it. And yeah, I think that's where a lot of the opportunity is. So
Yeah, yeah, for sure, for sure. I mean, value add is the opportunity. I mean, if you want to get in and do the work, I've done a ton of value add, so like it's got to make sense for me, because I know the gray hair that it causes. I know the stress that it can cause, dealing with code enforcement and health departments and all that stuff, and it can get a little hairy. But you're right, that's where the big jumps in value can be, if you're willing to go in and roll your sleeves up on deals, for sure. There was something interesting that I read about you. So you talked about you had a 900-foot fall
yes.
from a mountain. Like, what do you? I'm looking at that and I'm like, really? Like, what? Explain that to me.
So before I had kids, I used to pretty much, as one of the reasons I didn't figure out real estate and anything else, is I pretty much only wanted to think about climbing. Yeah, that's all I wanted to do with my life. And so I was doing engineering and climbing. So I, when we had kids, I started kind of running out of time, but I was still trying to do it. But I got a little bit out of practice at it, but I still thought of myself as a climber. And so, yeah, one day I used to climb, we used to climb mountains and then find routes where you could ski down. So you climb with the skis on your
Okay.
back and then ski down. And so there's a mountain in Idaho called Mount McGowan, and it's got a beautiful couloir on the north side of it. It's one of the, it's like on the 50 classic ski descents in North America list. And so we were going to go do it in the Snowmageddon year. That same year, the roof collapsed on that home. They refer to that year as Snowmageddon in Idaho. Big snow year. So we were going to go do it in May, and the snow would have been great, but I was working so much. I blinked 3 times and it was July. And so I still wanted to do it. And I finally had an empty weekend, and I convinced a buddy to go. I was like, it's north facing. I think there'll still be snow. So we tried to ski this thing in July, and we climbed up it, ice axe crampons to the top with skis on our backs. And it was 75 degrees and sunny on the summit. It was beautiful, but the sun never got into where the couloir is. So it never softened. The idea was you climb up in the morning when it's icy, and then the sun softens it and you can ski down it when the snow's a little softer. It never
Yeah.
really softened up, and I got impatient and I went for it. I tried to make a turn. My edges didn't hold. and I just accelerated. I started tomahawking down it. I had my Strava running. It clocked me around 50 miles an hour tomahawking down this thing.
My
Um,
gosh.
I should have died. And it messed me up. I haven't really done much in the climbing stuff since then. My wife was pregnant with our second kid, and it
My
sort of
gosh.
made me question a lot of things. So it really made me kind of step back and say, like, what do I want? Like, it, my focus has shifted a lot more towards my family since then.
Yeah.
And just trying to be there. Like, I almost didn't get to meet my second kid,
Wow.
which still kind of like it messes with me. So,
Yeah.
yeah, so that was a real big reset for me as far as priorities and what I want to do. So now I'm all focused, I try to focus on, dates with my wife and time with my kids, and um, it just kind of put things in perspective. I was like, why am I doing this other thing that I've lost 3 good friends to climbing before that. And so it's a really fun sport, but you can do I screwed up that day, but you can do everything right and
Yeah.
still rock fall, just random rock fall from above you, and that's it. So yeah, it's anyway, that's my story about falling down the hill, and it kind of drove me a little bit towards, I think I need something that I can get obsessed about, and that I can, and it's difficult, but I can see myself improving. And so in a little bit of a way, I think the mobile home park stuff has kind of filled that void a little bit, for me, as far as needing something that I can, see myself improving at and work at and obsess over.
Yeah. Yeah, it's interesting when you talk about that, like obsessing over something. I'm the same way. It's a typical entrepreneur. It's like I need a game that I can't beat, that the bar is like I can basically chase the bar and the bar keeps like raising. Like when I was a kid, I used to like playing like Sim City and those
Oh
games that
yeah.
like you can't beat. Like you can keep going bigger and bigger and bigger and bigger and bigger. And so I totally get what you're saying. It's like it's the typical entrepreneur. And if you're not an entrepreneur, you will not understand what Corey just talked about there. Like you need something because you have that thing in you to like, what are we doing here? Let's go. I gotta have something that's pulling me forward.
Right. Right. Exactly. Yeah. Something that is exciting and gives you motivation and a reason to get up and want to get better and learn and everything. So, yeah.
Yeah, yeah, for sure. I know we skipped around a little bit on that, but talking about, as we talk about mobile home parks and affordable housing, and we're helping, affordable housing in areas which we're helping it, but we're barely even putting a dent into the crisis, because it's a massive crisis. So like, how important is that to you? And then like, what do you think solutions are for the future for affordable housing?
So that's a really good question. When I bought my first park, I did not buy it with the intent to help the affordable housing crisis. I was looking for a way to have passive income so I could, spend more time with family and not miss my kid growing up, right? It was more personal reasons. But then after having been in it and seen it firsthand, it's a big deal. And there's a lot of people that need housing out there. And the only reason apartments are affordable is because there's, the government subsidies that make them affordable. They're not really affordable. $1,500, $2,000 a month is not
Right.
affordable, for a lot of families. And so yeah, I know mobile home parks aren't the only answer, because there's only whatever there are 44,000 of them, and it's real hard to build any more,
Yeah.
because it's hard to get them permitted. But I think supply is the answer. We need more housing than we have, and I think there's a whole lot of these parks out there with empty pads sitting there, and someone's just got to bring a home in and put it there, and have it available for sale. And you can, if the park we have in Cincinnati, the median home cost is $250,000 in the area. And we can bring in a brand new 3-bedroom, 2-bath home with smart thermostats and the whole thing. It's really nice. And it's 70 grand.
Mm.
And so it is a price that a normal family can afford, without some crazy high income. And so yeah, it's rewarding to me to see it. When we bought our park down in, Arizona, we have a park outside of Tucson. Right after we bought it, shortly after we bought it, there's always people coming in looking for places to buy, but a lady came in and she was kind of panicking. She went to the manager and was like, her other park was getting redeveloped. she'd lived in it for 16 years. She was in her mid 50s. Her husband was in her mid 50s. She worked she was the, the front desk lady at a doctor's office. Her husband worked at the golf course. Their kids were grown and gone. They were kind of retired. This was their home. They sunk a bunch of money into it, and they were going to lose it because they had nowhere even had vacant pad. We had one pad where the utilities were ready to go, one empty pad, and we were able to help her with moving costs and kind of get her in. And it was a really cool thing. But then there's a whole bunch of other people like her that don't have anywhere to go. So it's, you see that, and it's, even if you can help one family, that's really good. And then you can make a return for it. It's kind of one of those cool things where it's like, you are actually providing something that people need, and you can make a return while you're at it. And so, yeah, it's a big deal.
Yeah, yeah, for sure. It is. I mean, it's a win-win-win, all around for, the residents, the investors, everybody, because it's helping many, many, many causes. Do you foresee any like industry disruptors coming down the pipe here?
I I have a hard time seeing what that would be. I mean, you can't always know, right? Like maybe someone's going to start 3D printing houses real cheap, but I don't know. I don't think, I don't, it just seems like there's so much of an affordable, the affordable housing crisis is so big, and the apartments that they build tend to be class A because that's what
Oh
actually
yeah,
pencils to build one.
exactly.
And they're not, it's hard to get permits. I know in Texas, they've made it easier to get some permits to build more mobile home parks. That's one state where I know recently you can do that. But in most places, most people don't want a mobile home park next door, right? So they're going to show up to the city council meeting and kind of protest it if you try to build one. We're looking at a few where we're looking at expansions. But I think we're kind of lucky that there's smaller towns outside of bigger towns, and the smaller towns are supportive. But I don't see, it's not like apartments where all of a sudden, hey, the market's good, where everybody's going to build, and now it's overbuilt.
Right.
There's not a lot of, I mean, the stat that everybody throws out is that there's more mobile home parks redeveloped every year than there are built. So
Yeah, yeah, yeah. And I think there will continue to be an opportunity unless something crazy happens, unless, yeah, someone figures out super cheap 3D printing. But even then, I
I mean,
think
even then, wouldn't you put those in your park? Right? So
probably would. Probably would. If you could,
yeah.
if the zoning and the permitting isn't crazy, or however that would work, that's always the thing that I worry about in parks and things. But we'll see. I mean, I think as long as apartments, I mean, you're right, because yes, they're building apartments, they're increasing supply, but the supply is not affordable supply because you can't build affordable, and it pencils, just like you said. And so I think we still have a pretty good runway here, even though that the industry has, from when you started buying in 2016 to now, there's a lot more people in the industry. The industry is a
There
lot
are.
more known. And but I still think there's opportunity there. Do you agree with that?
Totally. And I think that's why I like the value add stuff, because there are a lot more people coming in, but a lot of I think there's a little misconception with people coming in as far as like, oh, they're so easy. It's tenant owned homes. If the toilet leaks, it's not your toilet. And so I think that people underestimate the management side of these things quite a bit. And so that's why I like if getting good at the value add side, I think there's a pretty big barrier to entry there, just in the sense that it's a lot of work, a lot of different contractors. It's quite, it takes quite a doing to do the value add and manage those projects. So I think that's where in my head, like that's where it seems like we can still get parks that you can pay a fair price for it right now, but gosh, once you fix the roads and make the roads nicer and help people skirt the homes and put some fencing and signage and fill those empty pads, then it's worth a lot more down the road. So I feel like that's, whereas in 2016 it was like nobody knew them, and people would look at you cross-eyed. You're investing in what? Mobile home
What?
parks? And so because of that, no one else was, it seemed like there was nobody buying them. And so then you could just buy them with really, really good cash flow out of the gate. I feel like it's a little bit more, you have to think a little more creatively and do a little bit of work to get there. But the opportunity is still really big, if you're willing to do the work.
Yeah, if you're willing to do the work, but I've found that you do have to get a little bit more creative on what you're doing and how you're buying some of these deals. Um, especially if you're buying in great markets and around larger MSAs, with lower cap rates and, um, there's still ways to buy deals. Um, you just have to get a little bit more creative,
Send a lot more offers.
and send a lot more offers. Like we have 2023 was like a bloodbath. It was like we saw deals and we're like, no, like quick, no, no, F no, 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 no. And now this year this year it's been like, meh. So I feel like we're getting some movement there, and we've got a pretty full pipeline of stuff happening. So what do you I know the CPI numbers and whatever you want to think about those the other day came out, and it was, CPI was still hot. And so, people are a little concerned about what's going to happen with rates. But what's your future outlook on the market? What do you see by the end of 2024 here and going into 2025?
I mean, the CPI came in I mean, it's still going down. It just didn't go down as much as everybody thought, right? I know that bonds spiked up and interest rates went back up again. I, I think at least the conversation still seems to be, and I'm not an expert, right? I'm not an economist, but the conversation at least seems to have shifted from 6 months or 9 months ago. Hey, how high are the interest rates going to go? Now it seems to be, hey, when are we going to cut? Right? It's not like are they still going up? It seems to be everybody's kind of agreed that, unless the inflation totally turns around, it seems like we're at least at a top.
Yeah.
Sort of is, I don't know, from my reading, but like I said, I'm not a I like to listen. I read the Wall Street Journal and listen to a bunch of economist podcasts enough, probably just enough to be dangerous. But that's at least like the conversation between the Fed and everybody else seems to be, when do we cut versus, and I'm sure they're not going to drop them way down, right? But it does seem like it's at least topped out. And so if everybody kind of knows where things are and everybody realizes, okay, interest rates are here, so cap rates need to be here so that the deals pencil. I don't know. Hopefully that'll help. I don't know.
Hopefully.
Yeah.
But I don't trust these guys. I don't know what they're going to do. I mean, the CPI numbers to me are like, I think they're, from what I understand, is they're like 12 months in arrears, aren't they?
Yeah, on the rent, on the real estate piece. Yeah, they're
Yeah.
comparing like today's tomato prices to last, like 12 months ago rent prices. See,
Yeah. So
I
how,
don't
how
fully get it, but
yeah, yeah, makes no sense to me. So let's just, I think my opinion is I think we're at the top. Um, if we see a cut this year, I might be surprised. Maybe they'll hold it. It would be towards later in the end of the year, and it's not going to be much if they do it. It's just going to be a small cut. So
right,
we'll
right. Yeah, it
see.
seems kind of like it's gonna things stay the way they are for a while. Is the way it seems like it's gonna be.
Yeah. In the states that you're buying in, like what, deals you're seeing come to market, like what, you're buying value add, so the cap rate doesn't really matter what the going in cap rate is. But what do you look at? Are you trying to, solve to an 8 cap, a 10 cap, a 12 cap in the first year or two, or like what's your strategy?
Yeah, so the one that we just are about to close on, once we get it all, once we kind of get it all full and execute, it was around an 11 and a half cap is where it would end up. As far as like a stabilized yield on cost. So basically like including the CapEx expenses and everything else. Um, so yeah, so that's, and then going in, it was in the upper sixes, but like you said, there's a lot. It's because of the meat on the bone. It's not really like a cap rate calculation. It's,
Yeah.
here's the returns we want. How can we get those returns? That's kind of, we're backing into the price that way.
Yeah, yeah, yeah. Same. And that's how we do it on value add. I mean, on stabilize, which I do, the deals we've got under contract now are more stabilized deals. And I'm getting
Mm.
kind of like, I like these, man. They're a little bit less work, and I just got to wait a little bit longer on the upside, because if I buy a heavy lift value add, it's going to take me a couple of years to kind of get it stabilized anyways. And so I'm going in and looking at it. If I'm under market rent, it's going to take me 2 or 3 years to kind of get stabilized from a rent perspective. And so I've been battling with, it's kind of the same thing, right? Because when you're doing the heavy, like if I'm converting park-owned homes and bringing in homes and filling up vacant park-owned homes, it's going to take me time to do that anyways. But it just looks sweeter on your calculator when you're like, okay, as soon as I do this, if I get it done in a year, boom, we get this pop in a year. But
Right.
the
It's
likeliness
work.
of that happening in a year is pretty low from
The
what
the
I've seen.
thing I have a hard time with the stabilized ones is just it seems like everybody pounces all over them and the prices just don't, when there's no upside, I don't like it. It's like, man, that's barely going to cash. I don't know. I mean, maybe you can project out like, hey, the rents, if you're projecting future rents or increases, I have a hard time understanding how to underwrite those versus like, hey, I can control this, and this. We think we can infill this many a year. So I'm going to be conservative and guess that we infill half. And hey, look, the numbers look really good. Um, that's why I just have a hard time on the pricing on the like getting to the price that everybody wants on the stabilized ones. But lots of people
Yeah.
do it. So there's clearly a way to make it pencil.
Yeah, I mean, I think if you can, I think if you're buying in good markets, I think the rent growth will be there just because of the sector that we're in. I don't think I think apartment rents will probably level out to a degree. Like people are already starting to have, give more concessions to even get the place filled up. We won't have to do that, but maybe we won't be able to get, 10% increases, but maybe we can get 3 to 5. I mean, I'm talking in like, the markets we're in, some, Tampa, like markets like that. They're like
Mm,
really, really hot markets. Like there's just, I mean, I feel like the traffic gets worse here every day. Like
right.
there's
I
just,
always
it's
like to call
crazy.
them like it's like they're like the submarine under the storm because the apartment rents are dropping, but if apartment rents drop, 10%, they go down from 2,000 to 1,800, and expensive mobile home lot rent is $500 a month. We're still sticking to our business plan. We're still sticking to it's they're
Yeah.
so much cheaper than everything else that it is kind of like all the market rent fluctuations don't really seem to matter. The demand is still there and it's still a great deal compared to it's 2,000 versus 1,800 versus 1,600. Hey, we're
Yeah.
500. And yeah, you got to buy a house, but it's still, even you can add a house payment in there and it's still way less than the apartment. So,
Yeah, I mean, because like if you're in a hot market, I mean, I think you said in Cincinnati it's 250 grand a house. I
right.
think in, Orlando and Tampa, I don't know what it is, maybe three
A
something,
lot.
400, like at 7% or 8%, whatever it is now. I don't know what those numbers are, but you know, it's expensive.
Totally. Yeah. I don't know how I'm real happy. We bought our house in 2011 and I'm very, very happy about that.
Yeah. Yeah,
Yeah.
for sure, for sure. Yeah, well, Corey, man, I appreciate you coming on the show. Is there anything you want to leave our listeners with before you go? And then, after that, how can people find you?
Yeah, absolutely. People can find us. I've got a website, freedominvestinggroup.com. We have a free PDF guide to mobile home park investing, kind of geared towards people who want to do it passively and invest in syndications. And I'm a total nerd, so if anybody wants to chat mobile home parks, you can contact us through there as well. And I can talk about these things all day. So would love to nerd out with somebody if you're so interested.
Awesome, awesome. Well, Corey, we appreciate you coming on, and thank you everyone for tuning in to this week's episode of the MHP Show. Please like and subscribe on iTunes, Spotify, YouTube. Subscribe to the YouTube channel. I drop stuff there every day. Also, check out our Facebook group. It's called Mobile Home Park Investing Pros. We drop all kinds of content on that on the group on a daily basis. So we will see you all next week. Peace.